Singapore is a place where every multinational company grasps a great momentum to sky launch. But here is the list of the largest Singapore-based companies. Trafigura. Base metals and energy are traded by the international commodities trading firm Trafigura Group Private Limited, which was established in Singapore in 1993. It has created or acquired stakes in pipelines, mines, smelters, ports and storage terminals, making it the largest private metals dealer in the world and the second largest oil trader. The business runs a sophisticated global network of more than 100 subsidiaries, with its primary offices in Geneva and Singapore. DBS Group Holdings. DBS Bank Limited, also referred to as DBS, is a worldwide banking and financial services company with its headquarters in Singapore's Marina Bay neighbourhood. The Development Bank of Singapore Limited, from which DBS was formed, was the bank's prior name before its current abbreviated name was adopted on July 21, 2003, to better reflect its status as a worldwide bank. With its headquarters in Singapore and more than 280 branches distributed throughout 18 markets, DBSM is one of the biggest banks in Asia. Before changing its name to a commercial bank, the bank had been founded as the Development Bank of Singapore Limited by the Singaporean government to perform the industrial finance tasks for the Economic Development Board. As may be predicted, Hong Kong and Greater China are the bank's next largest exposures after Singapore. The bank's consumer banking, institutional banking and treasury segments each provide varied contributions to revenue. These are the main elements influencing DBSM's success because Singapore houses the majority of its lending activity and is a price taker in terms of interest rates. In recent years, the bank had also adopted a very aggressive approach to its digital transformation. Singapore Telecommunication. One of Singapore's 4 major telecoms, Singapore Telecommunications Limited, also known as Singtel or stylized as Singtel, is a telecommunications corporation. With 4.1 million subscribers, the firm is the largest mobile network provider in Singapore. Through subsidiaries, it also had a total mobile subscriber base of 640 million users at the end of the 2017 fiscal year. With 82% of the fixed-line market, 47% of the mobile market and 43% of the broadband market in Singapore, Singtel has a sizable market share in both Australia and Singapore. The corporation also owns shares in businesses in Asia and Africa, including Telkomsel in Indonesia and Bharti Airtel in India. Offering services like mobile, internet and TV solutions to a diverse spectrum of customer profiles, Estel is divided into 3 segments: consumer, group enterprise and group digital life. Competitiveness is a major factor in how much revenue is affected in the rather crowded Singapore market. However, due to its wide range of offerings, Estel was also thought to be the strongest among the incumbents. Despite declining revenue at home, Singtel is prepared to boost its offering with a 5G standalone network in Singapore once the 5G wave arrives. In the application for the virtual banking license with the MAS, Stel also considered the virtual banking market with ride-sharing company Grab. Wilmar International. A food manufacturing and investment holding firm based in Singapore, Wilmar International Limited, with more than 300 subsidiary businesses. On the 2020 Fortune Global 500 list, it came in at number 211. In 2019, Fortune placed it 3rd among the world's most admired companies in food production. Wilmar had a shorter history than the other individuals on this list, having been created in 1991, although having a prior history as a flour milling company. The company's revenue from China accounts for over 50% of its total revenue, putting it vulnerable to changes in demand. With advice on the expected listing approval into H2, the company is preparing to list in China as of mid-2020. Unilever, a Fortune 500 business, ranks as one of WLIL's biggest clients. the primary determinant of crude palm oil prices for palm refining margins, as well as the aforementioned Chinese demand, notably for animal feed, are factors that have an impact on WLIL's prices. Changes in exchange rates affect WLIL's business. Overseas Chinese Bank, a worldwide banking and financial services company with its main office in Singapore's OCBC Centre, is called Overseas Chinese Bank. The Ho Hong Bank Limited, the Chinese Commercial Bank Limited, and the Overseas Chinese Bank Limited were combined to become OCBC Bank in 1932, emerging from the Great Depression. OCBC Bank is one of the bigger banks in Asia Pacific, with assets of more than 521.3 billion Singaporean dollars, making it the second largest bank by assets in Southeast Asia. Similar to DBSM, the bank has a high rating from rating agencies and is thought to be among the safest banks in the area. OCBC's operations are spread out throughout Asia, primarily in markets in Greater China, Singapore, Malaysia, and Indonesia. OCBC's private banking division is comprised of Bank of Singapore, Great Eastern Holdings, and Lion Global Investors, while the bank's asset management division is made up of the Bank of Singapore. In terms of exposure, the bank is vulnerable to many of the same causes as DBSM, despite OCBC having a far greater profit from international activities when compared to peers. Jardine Matheson Holdings. Jardine Matheson Holdings Limited is a British multinational conglomerate with a Bermudan domicile. It has secondary listings in Singapore, Bermuda, and the London Stock Exchange, in addition to its primary listing there. One of the Fortune Global 500 companies is Jardine Matheson. According to market capitalization, Jardine Matheson and Jardine Strategic were two of the top 200 publicly traded businesses in the world in 2013. Jard ranks second with a market capitalization of over $42 billion, which measures a company's total market value in dollars. The company's history began in the 1830s. It will be impossible to discuss one Jardine without the other, because Jardine Strategic Holdings, which is ranked third on this list, is a part of the Jardine family. According to the corporation, Jard acts as the holding company and owns an 84% stake in JSH. The majority of the company's significant listed holdings are in turn managed by JSH. However, it should be emphasized that this also includes a 58% interest in Jard, making both businesses extremely intertwined and subject to pricing changes. The holding firm also owns the Jardine Pacific, Jardine Motors, and Jardine Lloyd Thompson brands. Notably, the majority of Jard's revenue comes from the JSH suite of businesses. Due to internal turbulence in Hong Kong, where Jard receives a sizable portion of its business, prices had fallen into the second half of 2019, losing Jard the top rank in terms of market valuation in the process. United Overseas Bank. United Overseas Bank Limited, also referred to as UOB, is a worldwide financial organization with its headquarters in Singapore and offices primarily in Southeast Asian nations. Before changing its name in 1965, UOBH was founded in 1935 as the United Chinese Bank. The bank offers financial services through its global network of offices, principally in Singapore, Malaysia, and larger China, similar to DBSM and OCBC. Wee Keng Xiang, a businessman from Sarawak, founded the bank with the assistance of other merchants who were of Chinese descent. By total assets, the bank is the third largest bank in Southeast Asia. Private banking, asset management, corporate finance, venture capital, investment, and insurance are all services offered by UOB in addition to personal, commercial, and corporate banking. It operates 68 locations in Singapore and has more than 500 offices across 19 nations and territories in Western Europe, North America, and the Asia Pacific. But the bank has more exposure to the Singapore market than its competitors. According to the bank, it leads the market in both credit cards and private residential home loans, the latter of which accounts for a sizable share of local retail lending. Flex. Flex Limited, formerly Flextronics International Limited or Flextronics, is a multinational, diversified manufacturing corporation with headquarters in Singapore. In terms of original equipment manufacturers, it ranks second behind Pegatron as the third largest worldwide electronics manufacturing services and original design manufacturing company by revenue. Flex's administrative offices are in San Jose, California, while its corporate headquarters are in Singapore. The corporation employs around 160,000 people throughout its manufacturing activities in more than 30 different nations. According to Revathi Advaithi, CEO of Flex, Flex achieved record success this year with a revenue of $6.6 billion, evidence of the team's great execution and passion to deliver for our clients and all of our stakeholders. As we enter the fiscal year 2023, we have good momentum and targeting a revenue of $7 billion, and we're still committed to achieving sustainable growth, improving margins, and maximizing shareholder value, she added further.